The year was 2008. The world was reeling from a financial crisis. Trust in traditional financial systems was shaken. It was in this climate that Bitcoin emerged, a radical new idea that promised to change the way we think about money. Bitcoin was different. It was digital, decentralized, and independent of any government or financial institution. Transactions were recorded on a public ledger called the blockchain, maintained by a distributed network of computers. This decentralized nature promised transparency, security, and freedom from the control of central authorities. The allure of a borderless, censorship-resistant currency was undeniable. Early adopters saw the potential to revolutionize finance and empower individuals. Bitcoin offered a glimmer of hope in uncertain times. It held the promise of a more equitable and accessible financial system. But as with any new technology, the road ahead was paved with both opportunity and risk. The story of Mt. Gox serves as a stark reminder of the challenges and pitfalls that lay in wait for this nascent industry. In the early days of Bitcoin, acquiring and trading this new digital currency was a challenge. Exchanges were virtually non-existent. It was against this backdrop that Mt. Gox emerged, founded in 2010 by Jed McCaleb. The name, a playful acronym for Magic the Gathering online exchange, belied its future significance. Mt. Gox quickly became the go-to platform for Bitcoin enthusiasts to buy, sell, and trade the digital currency. Its early success was driven by its user-friendly interface and the rapidly growing popularity of Bitcoin. At its peak, Mt. Gox was handling over 70% of all Bitcoin transactions worldwide. It had become the undisputed leader in the burgeoning Bitcoin exchange market. The platform's success attracted investors, media attention, and a surge in new users eager to participate in the Bitcoin revolution. However, beneath the surface of this rapid growth, cracks were beginning to appear. As Mt. Gox's dominance grew, so too did the scrutiny surrounding its operations. Early warning signs of trouble began to emerge. In 2011, the exchange suffered its first major security breach. Hackers exploited a vulnerability in its system, making off with a significant amount of Bitcoin. This incident raised concerns about the platform's security measures and its ability to safeguard user funds. Despite these early red flags, Mt. Gox continued to operate, attributing the security breaches to external factors. However, internal issues were also plaguing the exchange. Reports of withdrawal delays and difficulties accessing funds began to surface. Users expressed frustration with the platform's customer service and its lack of transparency regarding the issues. These concerns were largely dismissed by Mt. Gox as growing pains, a consequence of its rapid expansion. However, the reality was far more concerning. Unbeknownst to its users, Mt. Gox was facing a much deeper crisis, one that would ultimately lead to its demise. The year 2014 marked a turning point for Mt. Gox and the wider Bitcoin community. In February of that year, the exchange abruptly halted all Bitcoin withdrawals. Citing technical issues, Mt. Gox assured users that their funds were safe and that normal service would resume shortly. However, as days turned into weeks, the situation only worsened. The exchange's website became inaccessible, fueling rumors and speculation about the platform's solvency. The silence from Mt. Gox was deafening. Users, many of whom had entrusted their savings to the platform, were left in the dark, fearing the worst. Then, on February 28, 2014, the news broke. Mt. Gox had filed for bankruptcy protection. The exchange revealed that it had lost a staggering 850,000 bitcoins, worth hundreds of millions of dollars at the time. The news sent shockwaves through the Bitcoin community and beyond. Section 5. A Trail of Lost Bitcoins, Uncovering the Truth. The collapse of Mt. Gox triggered a wave of investigations and legal proceedings. Authorities around the world sought to understand how such a massive loss of funds could have occurred. The investigation revealed a tale of negligence, mismanagement, and potential fraud. It became apparent that Mt. Gox had been operating with inadequate security measures for years. The exchange had failed to implement basic security protocols, leaving it vulnerable to hacking attempts. Moreover, the investigation uncovered evidence of questionable accounting practices and potential manipulation of funds. Mark Karpels, the CEO of Mt. Gox, became the central figure in the investigation. While Karpels maintained his innocence, claiming that the losses were due to a transaction malleability bug in the Bitcoin protocol, many remained skeptical. The investigation revealed that the exchange's security had been compromised for years, with hackers siphoning off funds undetected. Section 6. Justice and Accountability. The aftermath of collapse. The collapse of Mt. Gox had far-reaching consequences. Thousands of users lost their savings, shaking confidence in the nascent Bitcoin industry. The event highlighted the need for greater regulation and oversight of cryptocurrency exchanges. In the aftermath of the collapse, Mark Karpels faced multiple charges, including embezzlement and data manipulation. After a lengthy trial, Karpels was found guilty of data manipulation but acquitted of the more serious charges of embezzlement and breach of trust. He was sentenced to a suspended prison term and ordered to pay restitution to creditors. While the trial provided some measure of closure, it did little to recover the lost funds. The collapse of Mt. Gox served as a harsh reminder of the risks associated with unregulated financial markets. Section 7. A New Dawn Repayment Efforts and Market Impact. In the years since the collapse, efforts have been underway to reimburse creditors. A lengthy legal process ensued, with a court-appointed trustee overseeing the distribution of remaining assets. The trustee's efforts were further complicated by the fluctuating value of Bitcoin, which had experienced significant volatility since the exchange's demise. Despite these challenges, progress has been made. In 2021, after years of legal wrangling, the trustee announced a plan to begin repaying creditors. The plan involved distributing a portion of the remaining Bitcoin and Bitcoin Cash holdings, as well as cash recovered from the bankruptcy proceedings. The announcement sparked mixed reactions. While creditors welcomed the prospect of finally receiving some compensation, many expressed disappointment at the amount being offered, which represented only a fraction of their original losses. Section 8. The Enduring Legacy of Mt. Gox Lessons Learned. The collapse of Mt. Gox left an indelible mark on the cryptocurrency industry. It served as a wake-up call, highlighting the need for greater security, transparency, and accountability in the handling of digital assets. The event spurred calls for increased regulation of cryptocurrency exchanges, with many arguing that existing financial regulations were ill-equipped to address the unique challenges posed by digital currencies. In response to the Mt. Gox debacle, governments and regulatory agencies around the world began to take notice of the cryptocurrency industry. New regulations and guidelines were introduced, aimed at preventing similar collapses from occurring in the future. The incident also prompted many exchanges to re-evaluate their own security measures, leading to improvements in security protocols and risk management practices across the industry. Section 9. Towards a Secure Future. Regulation and Innovation. The Mt. Gox saga, while a painful chapter in the history of Bitcoin, ultimately served as a catalyst for positive change. It forced the industry to confront its vulnerabilities and strive for greater maturity and resilience. The incident underscored the importance of robust security measures, transparent business practices, and effective regulation. In the years since the collapse, the cryptocurrency industry has witnessed remarkable growth and innovation. New exchanges have emerged, implementing more rigorous security measures and adhering to stricter regulatory standards. The development of new technologies, such as multi-signature wallets and hardware wallets, has provided users with greater control over their digital assets, mitigating the risk of theft. The Mt. Gox collapse, while a setback, proved to be a turning point for the cryptocurrency industry. It paved the way for a more secure, transparent, and resilient ecosystem, better equipped to navigate the challenges and opportunities that lie ahead.